All right, how's it going, everybody? Christian Collin here with Joe Collin Real Estate Team. I got Joe Collin, the man himself, in front of me here. Collin Bose to my right from RBC. Checking back in. It's been a couple of weeks since our last podcast. Things have been pretty stagnant since we've last spoke, but I wanted to kind of check in with some current market conditions. Got a rate announcement today, and let's dive in.
So, Collin, I'm just logging into the board here because I do want to talk about where the market's going right now and what we're seeing over the last couple of weeks. But do you want to just let us know what happened today with the Bank of Canada?
Yep. So Bank of Canada finally announced a rate decrease of 0.25%. So a lot of people will see on Instagram, Facebook, oh my gosh, rates just went down. What does that mean for me? Can I get a lower rate? Can I go refinance? Not so much. When the Bank of Canada adjusts their rate, all the other banks, financial institutions, credit unions, they all borrow from the Bank of Canada. So it usually takes them a week or two, even a few days to make their decision to adjust their rate. So there is a lag when it comes to fixed rate. So anyone expecting an instant drop, it's not like that. But if you do have a variable rate, the overnight rate does impact that right away, and the variable rate will decrease, which means on your mortgage you're paying less interest and more principal. So you're basically paying it down quicker. But there's a lot of headlines, a lot of news, bit fear mongering. So I always say talk to a professional, just break it down to English and what you understand and how it impacts your situation, because a lot of people will speculate and share their opinion, but it's a good sign for Canada. I don't know how much longer they're going to keep cutting rates, but
what number is this? A consecutive of what, like 6, 7? Feels like we've been cutting since.
It's like 4 or 5, right?
Is it? Yeah.
Yeah.
Feels like forever now, but I mean, at the same time, it was forever that we actually saw a rate cut.
Yeah.
Like I joined the business in the start of 23. I didn't see a rate cut for well over a year, just holding rates that entire time. So I mean, it seems exciting, but the kind of the unfortunate side of things is that you kind of got, some other factors starting to affect things, such as, the election, kind of some of those tariff threats started coming into play. So kind of unfortunately atypical as to the last few years, where things kind of start looking, sunny and bright, and then all of a sudden the clouds kind of start to roll over again. You're like, oh no, thought we were kind of getting out of the woods here, but we'll see. You never know, but I mean, head in the right direction, like you said.
Yeah.
Just looking at the data over the last 12 months, trying to make sense of what's going on. Typically, this time of year, we do expect it to pick up, but in certain price ranges, we've noticed it to be picking up more than normal. And Christian, I think Miranda mentioned yesterday that you didn't feel necessarily the same way. That's not the perspective you've had.
Yeah. But I mean, I think Miranda made a good point. Her rebuttal to that was just saying that I'm not necessarily in those price points right now. I think those, 2 to, I would say 475, not quite like up in the high fours, but I mean like 3 to 450 for fun is certainly a competitive market right now, and of course below. Yeah,
it's interesting because right now our inventory is still high. The number of new listings is low, but it's low typically at this time of year. Most people are holding off till March or April. But if I actually look back, we're higher than February of last year, and February usually outperforms. We're not even done the month of January yet, and our January is already outperforming last February, and we're not that far off of March, which is showing that the listings are increasing, but we are seeing a lot more competition, which tells me a lot more buyers are coming to the table. Are you seeing more pre-approvals lately than like the same time last year? Yeah. So competition is definitely picking up in a lot of different price ranges. Even in the high price points, we're seeing multiple offers on a lot of houses. Houses are starting to sell in the first week or two. They're not sitting as long again. I know as far as inventory, if you go to months of inventory right now, we can't use this month as a data point because it's not over yet. But even December is significantly higher than the previous. But I do think it was a lot of leftover listings from the end of last year, and a lot of them just may not be what buyers are looking for. So although there's maybe a lot of inventory, there's not a lot of inventory that matches the needs of a lot of the buyers that are out there. So it's interesting. The data doesn't necessarily show what we're feeling and seeing out there. And I do expect this is outperforming what I I thought was going to be a busy January, February. I thought it was going to be more competitive than the last 2 years. It definitely is, but I think it's actually more aggressive than I anticipated. And when with another rate cut, I expect things to get maybe even more competitive now going in towards March and April. Maybe more so similar to like a 2021, 2022. I definitely see this outperforming 23 and 24.
Yeah, certainly. I think given the current market conditions, but I would say that's probably the biggest question mark for me, at least last year, was just you finally saw that influx of inventory and you just weren't seeing the same number of sales. You weren't feeling the same amount of traction in the market in comparison to those years prior, even though the inventory had finally kind of hit the market, which was such a change, especially for here in Windsor, Essex, when inventory was always in a shortage, whereas last year it was kind of you finally had stuff. But it's kind of like what you said, Joe, a lot of it seemed like it wasn't necessarily what people were looking for whatever reason that may be. It could be a number of reasons: location, price, whatever, rates. You can go on and on. But it was interesting to me that you kind of finally saw the inventory, and it almost felt more stale than in recent years, which was weird.
Yeah, looking at a chart for the last 2 years here, our inventory was going up as the interest rates were going higher. We had more and more houses going to market and less buyers. We peaked in 2023, kind of even throughout the spring, summer months, and then back into the fall, winter, it got slow again. And then last year, once we got up into July, August, September, and that is what I felt. August, September, I felt like we couldn't move houses as quickly. Yeah. That is where we were at a 10-year high. But since September, we have been drastically dropping back down to similar to 2023 rates. And if more buyers continue to enter the market, those inventory numbers may continue to drop as well. So I think we've seen the peak. I think that peak was August, September, and that is right when we were starting to see the first, second cuts. And I do see a decline there. Now, the average sale price, I'd like to go back to January of 2022. And I've may have mentioned this on the podcast before, but the peak in our market, the highest Windsor's ever seen, I believe, was March of 2022 at around 722,000. So pulling that up,
which is crazy talk.
Shoot, I wish this would
show it in columns.
Yeah,
I was surprised he was doing it already, to be honest with you.
Let's go to September. Okay, so nice. In 2022, we started in January with, this is listings. I got to get average sale price. The average sale price in January of 2022 was 644, but we quickly got to 721,000 by March of 2022. They started raising the rates just shortly after that, and we went from 721 average sale price to an average sale price of 477 in December. It was a very, very significant drop to our real estate average sale price. So again, from 722,000 down to 477. And then into 2023, we slowly climbed back up, peaking usually I think around 600 in May. May and June typically seem to be our peak months for the average year. And then it slowly went back down to around I think 512. Yeah, 512 in December. And then the last year stayed more flat. The average sale price didn't really see that typical up and down that we see in the spring. It kind of just stayed flat. Interest rates started to come down. And if you compare the last 3 Decembers, December of 2022 was 477. December of 2023 was 511. And then the December of 2024 was as high as, I believe it was 580.
Of last year?
Yeah. 582. So the last 3 Decembers went 477, 512, and 582. So even with high interest rates, the average sale price has been climbing through the 3 slowest months of the year. And now we're at 582, which is only 18,000 off of the last 2-year highs. So we hit a high in July of last year at about 600. We hit a high of around 600 in May of the year before. So we haven't been able to really break that high of 600 for the last 2.5 years. But now we're sitting just under, if I actually look at where we're ending January, if the month were to end today, we're sitting at an average sale price of, that's 2024. If the month were to end today, we're sitting at about 574. So we're only within about 25,000 off of the last 2-year highs. So I do expect as we get into March, April, May, if the action that we're seeing right now continues, we will likely see a average sale price higher than the last 2 years. I don't think it's going to be a huge recovery in average sale price compared to what we've seen, but I do think maybe into 2026, 2027, if the market continues to stay in this direction, we may see that. But it's really hard to predict right now with so many different things going on in the world, between wars, change of governments, inflation, and not being able to be 100% under control. There's just too many unknowns. But in the micro market here in Windsor, I do expect that we'll probably see ourselves beating that 600 average sale price earlier in the spring of this year, probably getting closer into that 625, maybe even 650 if it's aggressive enough, which isn't too far off our all-time high of 2022. So we'll see how that plays out. But for first-time home buyers, I think this is going to get quite competitive and very tricky in the first-time buyer market in the 3, 4, 500s.
Mm-hmm.
It's crazy seeing the stat from 2022, I believe, when it hit
Isn't
the
that
peak,
crazy?
because majority of times clients are saying, I'm waiting to buy a house because I'm waiting for rates to come down
Yeah.
or waiting for price to come down. And
Yeah.
you see that chart, and I guess based on what's out there, sometimes the house doesn't feel like it's been lowered in price.
But rates are coming down, but it doesn't necessarily
Yeah.
mean their fixed rates are coming down, right? If you're on a variable, that might be a little different, but your fixed rates aren't really changing that much.
No.
Not yet, at least.
Yeah.
There was a few more data points I wanted to bring up, but just talking in regards to what we're seeing a little bit more out there is we are starting to see low price strategies coming back, meaning if you have a house that's worth $550, it might be listed at $499. We're seeing more of those offers coming in with no conditions, meaning people are getting their inspections done ahead of time. Pre-approvals ahead of time is just as more important than ever, if it was already important. But I expect to start seeing those 10 offers, 15 offers. We had a listing last night that had 9 offers on it. I do expect a lot of that to start coming back. Whether you're a seller, it's good news. If you're a buyer, it's not so great. It is what it is. We have a shortage of houses still in the country, and we have a lot of buyers coming to the area. So I do expect to see ourselves start moving back in that direction with interest rates continuing to come down, and another quarter rate cut today kind of solidifies that's the direction it seems to be going.
Yeah, I think it's kind of just the overwhelming truth is that kind of regardless of where we head with interest rates, like not to mention like Collin just said, like people will kind of wait for prices, wait for interest rates. The unfortunate thing is those two are kind of inversely connected, right? If one goes up, the other goes down, and vice versa. So I just think the overwhelming thing is that there's a lot of people just kind of waiting, and it will be interesting to kind of see how these two things combat one another in terms of kind of BOC announcements as well as kind of what's happening in the overall economic climate, with both tariffs as well as we have our own election coming up here in the province, which naturally, historically speaking, just kind of makes people a little more hesitant on moving forward on financial decisions of this size.
When I look at this chart just in the last 12 months on average sale price, it is pretty amazing how flat it stayed. It literally hasn't done much. It's just kind of skirted right under that 600 range. I am surprised if the month ended today in January that the average sale price is actually lower by about $8,000 than last month in December. I know the first 2 months of January are very slow, so it definitely plays into what the average sale price is. I do expect to start seeing those prices go higher than December and January into February and March. But I'm curious to see how this all plays out. Like statistically speaking, I track a lot of the average sale prices of what's going on in the Windsor area over the last 25 years. And I have here the average, where did I put it?
On the far right.
Is it over here?
Right there.
No.
Big stack guy.
I know I have a problem. It's something like 80 some odd percent of the time there it is. Okay. So from January to February, only 62% of the time over the last 20 some odd years do we see a positive change in the average sale price. It's still more likely than not. So December to January usually is 75%. So that's what we're in right now. We're in that December to January. We're actually seeing a decline, so that's interesting to keep an eye on. The month's not over yet, so a lot of the sales data that's going to come in over the next couple of days will average higher than the last 2 weeks, so that may start to bring that back up. But 75% of the time, we do see an increase in average sale price from December, January. January to February is 62, but once you get to that February, March, we're at 75%, 81% from March to April, 81 from April to May. And not until we get to June is it a 50% chance it goes up or down. So statistically speaking, we're looking somewhere in the 75 to 81% that we're going to see month over month continued appreciation in average sale price between February and May. And then once you get to the summer, we'll see what happens. And I think that will all be dependent on how aggressive they bring the rates down. If they continue to bring the rates down, we may see those June, July, August, September months continue to be aggressive. But as of right now, I feel more confident than not between now and April, average sale prices will go up. If you're somebody who owns a home that's looking to buy it this year, it's pretty relative. I mean, if your house goes up 10%, 5%, so the house you're buying might go up, but so does yours. But if you're a first-time home buyer, this is something to be definitely paying attention to, because the houses you're looking at right now could be worth,
Oh my gosh.
Bless you.
That was aggressive.
Excuse me.
So if I look at the average increase, February to March is 1.68%. So just the houses you're looking at right now could be on average almost 2% more just between now and March. And then from March to April, the houses they're looking at could be as high on average as 3.75% more than what they were looking at in February and March. So between the two, you're almost looking at a 5% increase between now and April of what you're looking at. So for first-time buyers, it's important to keep in mind that what you're looking at right now could be 5% more, but what's tricky is everybody's fighting for the same houses and there's not a ton out there. So that's what causes the competition. That's what causes these prices to go up. And the reason we see increases is because of the lack of product. The more competition, the more offers, and the higher the price goes. So one thing that makes me a bit nervous is some of the sale prices I've seen over the last couple weeks are not in line with the objective data. So the data right now at this time of year that we have to go off of is the last 90 days of sales. But the last 90 days of sales is November, December, January, which are slow times of the year. So the data we have to go off of is not fully reflective of the prices that are selling right now. So when you look at what's selling in November, December, and January, a house might say, okay, well, based on that data, this house is worth 600, only to find out it sold for 640. And what we're finding is buyers are now pricing in what they believe it to be worth in the spring to try and win these houses. So they're not using the last 3 months of sales data to make their final decision on the price. And that's why the average sale price goes up, is because people start factoring in what they believe it to be worth or what it's worth to them. So we have to be careful that we're not getting out of hand and our buyers are not paying more than they should, and trying to stay in line with what the data shows. But at the same time, this is why it goes up. People continue to try and outpace the data over the last 3 months. So it makes it very tricky to see where we're headed and what things are actually worth until they sell. But in the coming weeks, we'll have a much better idea as more sales data comes in for January, February, and March.
Yeah.
We've seen it before.
Yeah, that's for sure. Yeah.
I mean it's been a couple of years, but it's starting to give me a little PTSD a little bit.
Yeah, no doubt. Yeah. I mean, this is what, my third time going through it now. So yeah, I'm kind of getting more and more familiar with kind of how this goes. And like, I think you said it the other day, like where it's just very atypical to kind of like have like as an agent or as a mortgage specialist, like in these kind of winter, colder months, just to kind of be, accumulating and having more and more conversations, and then you start viewing, but then there's that lack of inventory, and then all of a sudden the spring hits and it's like, action picks up on every corner of the market. So, I mean, it kind of just comes to be expected, and naturally with those stats that we just spoke about, it's clear.
Where it's going to get really confusing for buyers right now is the list prices.
I know.
When you're in a transitioning market over the last 18 months, traditional pricing kind of came back into play where people were pricing their home around expectation or even listing it a little higher than what they believe it to be worth to leave room to negotiate. That was because the buyers were more in control. So when the buyers have more control, meaning there's not a lot of competition, buyers are coming in and negotiating. Sellers are pricing a little bit higher to leave room to negotiate. But as we start to see more competition enter back into the market, those low price strategies for multiple offers may come back into play. So we're going to see a mixture of pricing that's higher with room to negotiate, pricing that's accurate right to around expectation, and pricing that's drastically lower than what they want, hoping for multiple offers. But from the perspective of a buyer that's looking on Realtor.ca, they're going to see houses in their price range all over the map in regards to list price, and it's going to become very frustrating and confusing to which ones they can actually afford. If they reach out to us, we can actually send them the real sales data of what's actually selling in that and kind of educate them on what's going on. But I think these next few months are going to be very confusing for most buyers until we see which market we go to. So what to keep a close eye on is the close to list price ratio. That's what's being listed and what it's being listed for and what it's being sold for on average. So I'm looking at a 2023 chart right now where in January, February, March, you'll see it slowly start to change where in January of 2023, it was very non-competitive. So people were selling their homes at 98.5% of their list price. But as we got closer into the spring, those low price strategies started to come back in. This is kind of what we're going to see right now, where it sold for over asking price by about 1.3%. And then we peaked in June that year in 2023 with the average home selling at 109%. So this is what we're going to see this year. We may see it even higher than 9% depending on how competitive it is and how low of inventory. It's just unknown how much inventory is actually coming. We could end up with just as much inventory as buyers and be just fine, but it doesn't seem to be the case just yet. But if I look back in 2024, you can see those spring months, that strategy was being used very heavily with 4, 5, 6% over ask. But then as we got into those August, September, October, November, where we were very high in inventory that we saw in those previous charts, those strategies came back down to around listed more accurately to expectations. But this year, it'll be interesting to see if we see that traditional curve like we would in 2021. I wouldn't even call that a traditional curve. That's just all over asking. But let's go back to 2019. That's a little bit more like it, where it peaks in the spring and then fades off into the summer months. So I do expect the strategies of people underpricing their homes to become more common than not in February, March, April, and May, and kind of increasing each month and then subsiding into the summer months. But something to keep an eye on, because as a buyer, you're going to see these list prices all over the map, but do anticipate those low price strategies to become more common in the coming weeks.
It's really interesting, though, too, like as a buyer looking at the pricing strategy of it, because in my opinion, you only buy a house once, but with your mortgage, you can always refinance, you can adjust your rate later down the road, or you'll come up for renewal. So there's opportunities, so you don't necessarily have to always time the mortgage side of it, but the pricing, like obviously year over year, it's clear in those months, they kind of just jack up right away. So
yeah. I mean, it's kind of hard to kind of pinpoint, exactly why, because at the same time, like, there's far more options to choose from. So like the truth be told is that, like, some buyers might be potentially overspending on certain properties, but at the same time, like, the average sale price is going up because overall there's just more on the market in all aspects, not just like the low side, but you finally have like those growing families, kids are out of school, you have a little bit more time to do landscaping, those sorts of things. So like so many different factors. Like me and Joe just met with clients last week that got this beautiful backyard. They've poured a ton of money into it. It's a great entertainment space, and they would be reluctant to sell without showing off that aspect of the property because they feel it's kind of key to their advertising, which we 100% agreed with. So like we encourage them to go to those warmer months where you can show that stuff off. So it's kind of stinks in terms of, you know, you want to do what's best for your financial situation, but like when push comes to shove, when something comes up and it makes sense for you, it makes sense for you. So, you know, the best part is just being well informed and, you know, going out and looking at your options on both, you know, the rate side as well as the, you know, your price points and inventory and all that good stuff.
Just to recap, even though we had a slower August, September, October, just comparing it to the last few years, in July of 2022, when the rates started going up, things got really, really slow. And in July of 22, we saw 426 homes sold. Last year, in 2023, we saw 465, but we outpaced that already in July of 2024 at 478. And then every month after that, 411, 439, we ended up at 463 last year. The average for the 2 years prior in September was 400. We ended up at 442 last year. The average for October for the last 3 years was 380. We ended up at 462 this year. And then November, the average was 334. We ended at 391 in 2024. This is homes sold. And the average for December was 245 for the last 3 years. And we ended up at 267. So for the last 6 months, we've been strongly outperforming the 2022, 2023 years. And we're seeing that trend going. So if we outperform the trend of 2022 and 2023 going into 2025, that suggests that we're going to see a much stronger year for sales. And for sales to happen, that would mean more listings and more buyers. So I just think all around, we're going to see maybe a healthier amount of buyers hitting the market due to the lower interest rates. I think we're going to see more listings hitting the market because people are going to see the value of their home being more in line with what they wanted to see in the previous years. I just think it's just going to be a more robust spring again. And that's kind of what I want to leave it at, is just be ready for things to really be in the direction of picking up. There's no data points here yet that suggest that we're actually going downward with interest rates dropping and the lack of productivity. It just looks as if everything's pointing in the direction of a busier 2025 than 2022, 3, and 4.
Yeah, we've just remained so flat, since then, you know what I mean, in so many different stats. So I just think, at the end of the day, like, people have kind of waited for that dip. But I don't know, like, usually when you see something topple over, it kind of tends to happen a little bit quickly, which it did. And then you kind of see that recovery phase, which is like this very stagnant, low level, like, kind of volume, which is kind of what we've seen. So, I mean, unless it's an instance where, you know, you take a heavy dive and then you remain flat and then it goes back down. But it's just, again, there's just not really anything to support that argument as much as there is to go up. You hate to kind of push that narrative, of course, that, like, things are going up, get in the market. But at the same time, like, if you look at the stats, if you know kind of where the data is headed and you see it historically speaking, it's just kind of the way it is, unfortunately.
I just pulled up the last 30 days of sales, and just looking at the sheet in these low price points, it's pretty rare that I see a house that has sold below what it was listed for. There's a few in there, like a 379 sold for 370, but I would say more than not, these are all selling over ask in those low price points. But if I go a few pages up into the 500s, I'm seeing a lot more of a mix. Some are selling over, some are selling under. So it really seems to be, once you get into those 500s and higher, that's where you're going to start to see a little bit more confusion in what strategies are being used. I think in those low price points, it's safe to say most are going to be underpriced right now. In the last 30 days, it does seem to be kind of mixed strategies. And then if I get up to the higher priced homes, honestly, pretty mixed in here too.
Not quite as dramatic.
I do see accurate to slightly underpriced in the 6.7s.
Yeah. So
in the 6-700s, it seems to be a lot of houses are pricing right around what they want and slightly below. I'm curious now if I go from like 800 to 1.1 million. In the last 30 days, there's been 27 sold.
Yeah, almost. I mean, it looks familiar.
I feel as if they're more just priced around what they're looking for. They seem pretty close. The ones that are selling over maybe within 15,000. A lot selling right around what they're asking for. And only once you get up to like the 1.1 millions is there maybe 50 or 100 grand to negotiate. So I would say then all low price strategies right now are likely more underpriced, and anything from 500 to a million, you're going to see more of a mixture. But as you get to the higher million mark, it's going to be maybe more accurately priced just around expectations. So nothing too crazy, nothing we haven't seen before, but it's going to be interesting how it shakes out because it's definitely going to feel different than the last 2 years.
It's very exciting.
What else?
Obviously, there's the uncertainty, but that's what I liked when I worked with you guys last year. Was you could look on Realtor.ca or Facebook. You can get your own insight to see where the market's going, but you only see what's listed. You don't see what's selling.
Yeah.
So to kind of have that 90-day report, that's huge.
Yeah,
it's always a fun little start to the search when you go through the preview of like what's sold, and you can kind of like quickly either like, you know, kind of be happy with what's going on or like be a little bit discouraged, but nonetheless, regardless of how you feel about it, it's important for you to know.
Yeah, no guarantee, but it's understanding.
Exactly.
If you go to Google, for anybody listening, you can go to the Windsor Essex County Real Estate Association's website. And if you just go to Google, type in WECAR, WECAR, and they have monthly reports there. We share the same data, but they have interesting data points on there if anyone's ever interested just to see how the market's trending and where things are going. There's a link to view a full report, and when you click that, you can actually scroll down and see where the majority of sales per price point are and kind of how that curve goes, that bell curve. And for year to date last year, it was pretty heavily favored in the 420 to 700 range is where the majority of sales took place. And the reason it's lower in the low price points is there's just not a lot of options in those price points because most houses are selling over 300 or 400. And then the high price points, the reason those drop off is just there's not as many buyers. So
surprising that you see more in the, well, I guess 1.4 is just a bigger pool, but the 1.2 to 1.4 is 54, the 1.4 to above is 81. But I mean, 1.4 captures a lot more.
Maybe farmland, things like that. So yeah, the majority of the market takes place really between 300 and 800,000, or really 300 and 700,000. Anything below 300, it's just lack of sellers. There's not a lot of people selling under 300, and then over 700, there's just not as many buyers buying over 700. So if you're somebody that has a house in the $300,000 to $700,000 home, I would expect those price points to be very, very active and competitive this spring. And I do think the high-priced homes will start to see more activity to follow as well. The low-priced homes, 300 and below, are going to become closer to non-existent if it continues to get more competitive. But they're interesting charts to see kind of more of a visual of where all the sales stand.
You know where else you could go to?
Our website?
Well, that, I mean, I should have shouted out our website, but Frank Binder drops that monthly report. Make sure you go check out Frank Binder. He's always dropping those reports on both Facebook and Instagram. And he kind of just kind of gives you a highlighted view and just kind of like a wide lens of kind of what's taking place on a month by month. But shout out Frank and his media team over there.
You were mentioning every time these rate cuts happen, your phone is blowing up, and everybody's always asking the same question, which is if it's changing their rate. Right now, I would say the variable is starting to look very attractive, right?
It is, but we're kind of talking about this earlier, where last few years we've been told the story that there's about 60% of Canadians between 2025 and 2026 coming up on their mortgage renewal from very low rates to almost double or quadruple. So in terms of affordability, you can't have more than half the nation turn their keys in because they can't afford their mortgage anymore. So they have to adjust rates in that sense, but then we're now starting to see the political landscape and things can change quickly. So you can't always bank on timing the market, but rather what's your long-term plan? Are you going to stay in the house for 5 years? Is it going to be a short-term rental? So variable right now is attractive, but
can you lock in a rate on variable?
Yeah.
Okay, so right now, very situational depending on the client. So
and February 1st.
Yeah. Right now, we're not seeing a lot
saying?
more long-term rates.
Donnie
Oh,
making the announcement. That'll
pretty much cause instant impact.
literally anytime
Everything
I
I'm
sign
seeing,
into like the local news or the national news, it's just like, and this is what would happen. And I'm like, oh yeah,
inflation spikes back up, and then rates have to also,
We were so close.
I really see the light.
I know. Oh man, especially for those, like for Canadians in general, man. Like you just don't want to see it. Like you just finally want people to kind of breathe a little bit easier. Like I think we all personally know people who are stressing over this next year to kind of see where they're going to land in that ladder of interest rates when their renewal comes up. And I can only imagine if you're on a fixed income. I mean, I just hopefully it all works out for the best, but in about 2 weeks we're going to find out pretty quick. So
Are you finding more of the buyers that are coming to you are nervous for 2025, or do you find more people are coming in excited to actually be moving forward compared to previous years? Or do you feel like it's pretty just average to the last couple of years?
Yeah, I'd say average. It depends who you meet with, what their goals are.
Yeah.
Some people need to get a different living situation, so it's different.
Do you feel this January has been different than the last couple of Januaries, or do you feel it's just a typical January?
Yeah, I feel like it's definitely slowed down in the terms of like social, like media and fear mongering.
Yeah,
people aren't as rambunctious. Like we went through the pandemic the last few years, so everyone was glued to what was going to happen next. Where people are kind of understanding things change. You got to ride out what's happening. So.
Yeah,
but it's good to stay in touch. Like that's why I tell people I don't mind when you text me asking me a question, because I'd rather
for sure,
rather than be confused from what you read online. So
I appreciate it. I think we got enough here for kind of just a market update on what's been going on. I definitely think the coming weeks will be more telling as we see more sales data come in for 2025, because right now we have 3 weeks to compare to 2024. But once we see another month, like as we get into February and can compare 2 months to last year's 2 months, and we can start getting a better sense of how these tariffs maybe play out and how interest rates are looking, how inflation's looking. And as we get closer to March in the spring market, I think we'll definitely have some good data points to share next time in the next couple of weeks. But if anyone has questions between now and then, they can always reach out to myself, Collin, or Christian. Do you have a website?
I sure do.
Post
the link right here.
Yeah.
Ian, no, you'll do it. Ian, post the link and the flyby of Collin's face. And you can reach out to Christian or myself under our About page on our website at joeconlin.com or realtorsforlife.ca. If you just go to the About, you'll see our team members there, and you can either click on Christian or myself, ask whatever questions you need, and we'll take care of you from there. And we'll kind of update you on the next one, I think, right?
We'll catch you
later. Catch you another time. All right. Peace out, Jobin.
Slickers.
See ya.